About a crap show for Tesla and for broader markets. Holy guacamole, things really took a turn for the worse into the afternoon, late trading hours for markets. Here in this video, I will dive into what the hell happened. Okay, it's almost comical as we start the first trading day of 2025. Markets continue to go to hell for no reason. We actually had good news today. So what is going on? What is coming next? And what should we expect? Is now a good time to buy? Or are we in the early innings of a crash? Okay, apocalyptic like crash. That's kind of where sentiment feels like it's at. So I will share my perspectives with you and what I am personally doing. So, ladies and gentlemen, let's go ahead and jump straight into it. Tesla had a very bad day, down over 6% today. Yikes. At the time of recording this video, Tesla is a $377 stock. That's bad, okay? Now, deliveries came in about 2% lower than expected. They missed by about 10,000 vehicles. Big deal. It's not the end of the world. Tesla Energy did very well, coming in with a new record quarter, and that helps to offset some of the delivery miss that we've seen. Also, the fact that Tesla ran down their inventory by what looks like about 35,000 vehicles in the last quarter, that should also help to boost profitability a bit. But even when you look at the broader markets got washed out into the end of the trading day today. It was brutal. It was bloody across the board. And I've been calling for this, okay? The headline risk to the S&P. If you look at like small caps, for an example, Russell 2000 up 1%, or at least at the time of recording this video. The VIX is soaring up over 7%, but there is a lot of headline risk, okay? Because of big tech. Look at Apple today, down 3%. Microsoft down 1.25%, Google down 1%, Netflix down over 1%, Nvidia is up 1%, Meta's up 1%, Amazon is pretty much break even today. There's a lot of headline risk to the S&P in January from big tech. We talked about this a lot, heading into 2025, right? We talked about this over and over again, where you're likely to see a kind of broader market rally, but selling in big tech. Now, broader market rally part, not exactly playing out. The RSP, the equal weight S&P, down 1/3 of 1% today. So not exactly seeing a huge broad-based rally. Small caps, again, are outperforming. But the headline S&P and the NASDAQ getting reamed again today. Okay, because of that headline risk from big tech. Now, is this the start to a larger crash? I don't think so. Nothing has changed, okay? When nothing has changed and markets sell off, it's usually an opportunity, okay? Unless there's some big bad boogeyman event that's coming that markets somehow are reacting to before we even know. Maybe. I don't know. Sure, could that happen? I guess. But is it likely? Probably not. Okay, it's the headline risk to the market cap weighted S&P. S&P is market cap weighted, okay? When you get Apple and all these other big tech names selling off the way that you've seen today, that's where you get, this nasty headline S&P NASDAQ move, okay? Fear is spiking again today, right? Because of the sell-off in big tech. It's not too often Apple is down 3% on any, given day. But that's what we are faced with. Now, again, RSP really outperforming. Small caps are really outperforming today, okay? Compared to large cap tech, compared to the S&P. I think that overall is a good sign. But I mean, you're still falling, right? There's still that headline risk to the S&P. Again, I just want to be clear, there is no news today. There is no reason why markets are selling off. They're just selling off because big tech is selling off, and it does look like to me you are seeing a fair bit of profit taking. Now, the funniest thing is we really don't even have any catalyst. Today we had initial jobless claims came in at an 8-month low at 211,000. Continuing jobless claims came in well lower than expected as well. Next week, you really don't have anything for data on Monday. You have factory orders month over month. On Tuesday, you have ISM services PMIs and JOLTS job openings. Those could be bigger catalysts for markets. You have the FOMC minutes on Wednesday. On Thursday, you really don't have much besides initial jobless claims. And on Friday, you have non-farm payrolls and the unemployment rate, as well as Michigan consumer sentiment for January. As I've explained in other videos also, we really don't have any earnings until about January 15th when you start to get your major banks. So we don't have much data, at least today and tomorrow. ISM manufacturing, which again is really a non-catalyst at this point. It's been in recession for years. It's not gonna be this big bad boogeyman thing, coming tomorrow, even if it is really bad. So what's happening today is kind of the opposite of what you've seen, at the end of 2024, right? Or really in December of 2024, where there was a lot of tax loss harvesting in the rest of the markets. Big tech did not get that as much because that's where the gains were. You did see in the last couple of days of 2024 some profit taking in big tech. This to me looks like profit taking in big tech. Okay, because everyone knows big tech's not going to do as well this up in 2025 than it did over the past 2 years. I can't find anyone that's super bullish in big tech for 2025. Now, big tech is trading at multiples that you would throw up, if you knew where they were trading at with the expected growth that, they're expected to have. Like Apple, that is a nauseously high valuation for a pretty much no growth company. Okay. I'm not surprised that they are getting sold today. Now, the algorithms, when they sell these big tech names, seem to sell off kind of everything with it. And that's where I think the opportunity really comes in. I think if Tesla sells off, much more, if the markets sell off much more, for no reason, again, that is an opportunity to load up. As long as we don't go into a recession, as long as the Fed does not need to raise rates or something dramatic, it is an opportunity. Now, if we don't get the bullish January effect, if we don't see buyers come in January, things are going to get a little bit weird around the inauguration as well. So if you don't see a bit of a recovery, especially next week, then I wouldn't count on that at all in January. Okay. Now, could you see some selling into the inauguration and then, by the news event? That is certainly possible. But it seems like to me, bottom line, profit taking in big tech, causing algorithms to sell off the rest of the markets. In some areas, doing better than others. Again, small caps doing a lot better than the NASDAQ, even though they all kind of slid into the end of the day today. The VIX also spiking 8%, now to almost 19 is very elevated, for really a low volatility, low catalyst period in time that we're in right now, right? The VIX at 18 is pretty much the same level you were at in April of 2024, which the S&P was down 7% at that time. That is very elevated considering the S&P following today, market cap weighted S&P that is down about 4.2%. Now, next stop is going to be that 100-day moving average, and that would be a peak to trough decline of about 5.1%. I do think you want to start shopping here for small caps, for cyclicals, for value, something like a Tesla that's now down 7% at $375. You want to take advantage of sell-offs like this, right? We don't know how much further things are going to sell off. As long as we don't go into a recession, as long as the Fed does not need to raise rates, I don't think this is going to turn into a full-blown crash apocalyptic event, okay? despite what people are saying right now, that's the only thing that matters. Nothing changed, okay? Nothing happened today. That's important context. Because when nothing happens, you typically want to what? You want to go out and buy the dip, especially when markets are as fearful as they are today. Okay, there's not too many times that you get this opportunity during a bull market to buy this low, right? I'm not talking about the S&P. I'm talking about the average stock in the S&P. I'm talking about small caps. I'm talking about value. I'm talking about cyclicals and dividend names and high quality stocks that people are just not in love with right now. Okay. Now, Wall Street has been in love with big tech. They're falling out of love with big tech currently. I think that will continue to happen in January. I literally have been talking about this for a while. There's a lot of headline risk for the S&P. And sure, the first day or so that big tech is now selling off a lot, you're getting other areas of the markets also selling off. But I think that will stop, and I think small caps and, you know, some of your AI names for this year, AI appliers, that is, like a Tesla, will stop selling off in January and start to really outperform the S&P in a pretty obvious way. Now, again, percent of stocks trading above their 50-day moving average at 36%. Roughly when 65% of stocks in the S&P are in a pretty severe downtrend, you want to be buying the markets, okay? Again, not too many chances you will ever get during a bull market where 65% of stocks are declining, okay? You got to take advantage of those opportunities when you get them. And right now is one of those, akin to August 5th, where S&P, you know, hit these levels of just internals looking disgusting. That was the yen carry trade blow up. And then S&P went up 20% in like 3 months. Okay. Same for April of 2024. S&P was down 7%. Average stock was beaten down. You went on a nice run after that. You're back. So if you regretted not buying in April of 2024, or you regretted not buying the August 5th yen carry trade lows, which is most of you, then you'd want to be buying here, essentially. So yeah, don't regret not buying when markets are this negative during a bull market. Not a financial advisor, that's not financial advice. Just a good rule of thumb, when 65% of stocks are in a decline, you probably want to buy that, not sell that. Now, same is true for CNN's Fear and Greed Index, sitting at 27 today, almost an extreme fear. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, neutral. Market volatility is neutral. Safe haven demand, extreme fear. And junk bond demand is neutral. This is about as bad as it gets during a bull market, okay? You're almost in extreme fear. You got to buy that unless you think we're going into a recession, or unless you think the Fed is going to have to raise rates next year. Absent of those two things, you want to be buying this market. Okay. Now, January is going to be a little bit weird because you have the inauguration on January 20th. If we don't see a bounce coming tomorrow, if we don't see a bounce next week, then you're going to get into earnings season again. January 15th, inauguration, January 20th. You know, do we buy the markets after the inauguration? Do we sell the markets after the inauguration? Is that being pulled forward today? Are we selling off now because of the inauguration coming January 20th? I don't have all the answers, okay? I can just tell you that historically you want to be buying when markets are this negative. Okay, now I think that's also true for Tesla. I think on a day where Tesla's down 7%, down to 23% now from its all-time high, you probably want to be buying this with the context of deliveries are not the holy grail for Tesla in 2025. It's all about AI, it's about robotics, it's about robotaxi, and it's about newer, cheaper priced Teslas, okay? So if you think all of those things are still going to happen this year, then I think now is a great opportunity to buy more Tesla. Now, there's also some speculation today that a tsunami is coming, according to Elon. And January could be the start of this tsunami that Elon predicted. Okay. Juniper will be revealed in January, probably with videos from top influencers like they did with Highland. The website will be updated and orders begin to flow in. There will be a huge demand from upgrades and folks waiting. Appears that China will be the first early in January. US might be early January also. No word yet on Europe. If the demand is big, this will move the stock back to just under 500 or maybe through 500. And here we have some images of Juniper, the upgraded Model Y that we are expecting to get in January. So this would obviously be great news. And I think over time, I mean, you're never going to remember the 2% delivery miss from this quarter like 2 years from now. It's going to be an afterthought, right? AI, robotics, robotaxi, all of those things are what truly matters. And those are the things that are really going to move Tesla stock. You know, all of these other things, just deliveries, who cares? Okay, it doesn't matter as long as there's not some kind of disaster and the business is not, you know, going down the poop chutes, which it's clearly not. Like, we still had a strong quarter. Okay, then we're gonna do just fine. Okay, next stop for Tesla, though, if markets continue to sell off the way that they sold off today, is going to be that 50-day moving average at about 350. Okay, honestly, you're not too far off of that, like $25 or so off of that. That could definitely be in the cards. Now, you also have the 100-day moving average on the SPY, which is down to 576. I think that would be a really good level, you know, to hit, to really flush out some of the people that are too bullish and, you know, get a good base starting to go. And I think at 576, the risk reward, even investing in the SPY makes a lot of sense. But I think the decline from here is mostly going to be in large cap tech. The sell-off has already happened in small caps. It's already happened in cyclicals and value and your average stock. Again, hence 65% of the S&P is in an active decline, right? So, you know, from that standpoint, I see why people are negative on the S&P. I'm negative on the S&P because of big tech. But if you're bearish on like small caps here, if you're bearish on the equal weight S&P here, like, what are you doing, right? This is your opportunity in those different areas. It will also be interesting to see if we do hold support at this 580 level, 581 level, because that is where we bounced on December 20th and then went on to rally about 2% from there over the next 2 days. So do we hold support at this low? Is this a double bottom? Can we start to move higher? I think tomorrow will be important to tell us more, because if we flush under this level, under the 581 level, then things are going to get really interesting. And it looks like a test of that 100-day moving average would most certainly be in the cards at that point. Final option activity for today for Tesla stock is actually better than it was in the video that came out earlier today. You had 224 different trades totaling $285 million with a positive order value of 59%. In the video earlier today, it was only 55% positive. So things look good from that standpoint. And yeah, I mean, today was not a great day for Tesla. But I do think you can look at this as an opportunity if you want to, right? Deliveries, as I said before this delivery report, they're not the big catalyst for Tesla like they were in years prior. Sure, on days delivery numbers come out, they can be important, right? It can move the stock, of course, okay? But is it going to make or break Tesla for months and months and months based on a 2% delivery number, you know, miss? No. Okay, it's all about robotics, AI, robotaxi, and new lower price Teslas, right? That's what 2025 is about. If that is delivered upon, Tesla stock's going much higher. And I think at these current levels, you're going to regret not buying here. That's my personal opinion. That's why I'm buying Tesla stock and why I bought Tesla today. Let me know what you guys think about this down below in the comment section. Again, if things get worse, you're going to test that 50-day moving average at 350 for Tesla. If things were to get like really bad, you could test that 290 level where this, let's see, 100-day moving average is. I mean, I doubt we go back to the 200-day moving average. That's around 240. I think it would take a lot of weakness in the broader markets to actually, test those levels. But 50-day moving average could be in the cards, down to about 350. 100-day moving average, if things get really bad, down to about 289 could be in the cards. But I mean, I think the S&P would be like in a really bad place if we test that 100-day moving average. So let me know what you guys think about this down below in the comment section. Why do you think markets sold off the way that they did today? I guess any opinion is valuable, considering there was no real news that came out. So let those opinions and speculations fly down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.